Are you tired of losing easy setups because you're targeting the wrong liquidity target? Well, in today's video, you're going to learn how to identify what are the strongest forms of liquidity and trade them. The first form of drawn liquidity we're going to look at today is relative equal highs. Now, the reason why relative equal highs are so powerful is because retail sees them as a double bottom or a double top. Now, smart money is actually going to use retail as a fuel to their fire and ultimately target these liquidity targets. As you can see here, chances are retail is looking at this range up here as a double top, thinking that price is going to continuously push lower. But us, as smart money concept traders, we are well aware that that is actually going to be the draw on liquidity. Now, let's dive into a live example here. Because we are looking to target daily relative equal highs, essentially our entry model also needs to come from the daily time frame. Now, we do have two different entry models here. We have a daily fair value gap, and we also have a daily equilibrium block. Now, a good rule of thumb is to always aim to enter off the lower POI. I do love equilibrium blocks, but personally, I would actually look to enter off the daily fair value gap because it is the lower of the two POIs. And because we're looking to target relative equal highs, we want to be entering off of the lower POI. I would look to put my entry at the start of the fair value gap, price target at the relative equal highs, with a stop loss at the low of the fair value gap candle. Now, as we can see here, it's a 3.57 risk to reward. Now, if you were to enter this trade, your stop loss would actually only be about $5,200. Your price target would net you over $18,000. Therefore, that risk to reward is worth it 100% of the time. Now, let's go down to the 4-hour time frame to see how this plays out. As you can see here, price pulled back to our daily fair value gap entry, and buyers instantly stepped in. Not only that, but we also got the retest of the daily equilibrium block. And just like that, PT is hit. The reason why this trade worked out is ultimately because market structure is bullish on essentially all time frames. If you were looking to target the relative equal lows, you would have lost this trade because you are not trading with market structure. So it's very important to be trading with market structure and also knowing what is the proper draw on liquidity. Now let's take a look at the second strongest form of draw on liquidities, gaps or liquidity voids. Notice how we have a gap here in price. Now let's take a look at the next strongest form of draw on liquidities, liquidity voids or gaps. Notice how we have a gap in price here and we have another gap in price here. Now, the reason why liquidity voids are so powerful and such a strong form of a draw on liquidity is because price has to move efficiently. Double click on your trading view chart and remove all of the wicks off your charts. You will notice that essentially every single candle from the close to open, the bodies tend to always connect. Now, the moment that the body of the close and the following candles open does not connect, that will likely form a gap. Now, the market has to move efficiently. If the close of the previous candle does not connect to the open of the next candle, then at that given point in time, the market is no longer moving efficiently. So what will price likely try to do? Price will likely gravitate back towards those gaps so that the market is now trading efficiently. Now let's try to find an entry model to target this liquidity void and this liquidity void. As we play this out, notice how we ultimately don't have an entry model to actually target this first liquidity void, which is perfectly fine. If you do not see an entry model, you do not take the trade. Now let's play this out some more. Okay, perfect. Now we are actually starting to formulate an entry model. Notice how we have this bullish 4-hour fair value gap here. Not only just that, but we also inversed a bearish 4-hour fair value gap, which is now implying that price is looking to seek buy side liquidity and offering a change of state in delivery back bullish. Because price ultimately offered a change of state in delivery and also created a market structure shift back bullish, very unlikely the price to come back down to this range. So because of that, I'm going to put my entry model at the start of this 4-hour fair value gap to target this liquidity void up top, with our stop loss at the bottom of the candle that created the fair value gap. Let's play this out. Notice how we get tagged in here perfectly, and price starts to expand straight up to our liquidity void. And just like that, TP has been hit. Now let's dive into the last strongest form of drawn liquidities for this video, data highs and data lows. Now, how we can identify data highs and data lows are anytime we have a red folder event. A red folder event is when there's a high impact news event that likely drops at 8:30 or 10 o'clock. Now, for this example, we have a red folder news that came out at 8:30, causing the market to expand up 30 points before displacing back down 100 plus points. Now we want to mark out the swing points of this range. So as you can see here, we have data highs and we have data lows. Now, before we go into a live example here, it's important to know why this is such a powerful form of a drawn liquidity. Anytime data comes out, the market will expand so rapidly that orders will not get filled. So it's the market maker's job to actually pull price either back to data highs or data lows to actually fill those orders before price continuously expands. Now that you know the why, let's dive into a live example here. As you can see here, we currently don't have an A plus setup. Now we actually do have an A plus setup. Notice how price took data lows and we got an instant expansion back to the upside. Not only that, but we also inversed this very tiny bearish fair value gap we have here, which is now indicating that price is likely looking to seek opposing liquidity. The only other opposing liquidity we have is data highs. So how I would actually look to enter this trade would be based off of this inverse equilibrium block we have right here. So I would put my entry at the retest of the equilibrium block with our PT to target data highs with a stop loss at the bottom of the candle that formed the inverse equilibrium block. Now let's play this out. As you can see here, price comes back, wicks us in the trade. And now we start to get that expansion straight up to TP. If you found this video useful, make sure to smash that like button, comment what you guys would like to learn next, and subscribe with post notifications to see exactly when my next video drops or whenever I do free live trading on YouTube. I'll see you guys in my next video.